Welcome to On the Chain. This is Jeff going live. Today we are going to get into and talk about some of the movements in cryptocurrency over the past couple days. Ripple XRP posts another win. It seems like Ripple is just stacking the wins, stacking the victories. Cryptocurrency moving up regardless of the SEC Rampage. We're going to talk about that and a lot more right now. Let's go.
Welcome to On the Chain.
All right, welcome to On the Chain. We got a lot of things to dig into today, a lot of good things to cover. Today I went with the English tea. This is the Yorkshire tea. Good stuff. Didn't have a chance to brew up the espresso this morning. Was out and about with the dog. Started talking to the neighbor. But hey, today's show is brought to you by permission.io. Permission.io. You guys know when you're browsing around the internet, you run into all sorts of different types of ads. And you know that those companies that are posting those ads are making billions and billions and billions of dollars off of your data, because you basically have no control over your own data. With permission.io, download a browser extension. Every so often they ask you to engage. If you want to engage with an ad, you say yes, you watch the video, and you get to earn ASK token, ASK token. It's a really cool way to engage with cryptocurrency. If you've never done it before, I recommend check it out. Go check out permission.io. So with that, we are going to dig into the topics of today. We're going to go into, let's see, we've got Ripple, we've got XRP, we've got Bitcoin going to 180,000. We've got crypto creep throughout Latin America. Seems like they keep moving more and more conversation throughout Central and Latin America regarding cryptocurrency, Bitcoin, others. Going to also get into and talk about the case of concern over China's digital yuan, the CBDC, how that kind of relates to what's going on with cryptocurrency. Twitter making some big moves in the direction of crypto. El Salvador, big moves. We're going to focus in on those. There's a brand new bank that is expanding out, or a bank that's actually expanding out, allowing Cardano to be directly accessed from bank accounts. Want to dig into that a little bit. And there's a lot here. We're going to go through a number of the countries that have a rocky relationship with cryptocurrency around the world. So my second monitor here, for some reason, did not come on. Not sure what's going on with it. So we are going to have to do without the secondary monitor today, and that's fine. We can do it. We can do it. We can survive. While you guys run in here, I see you're already doing it. Give a quick shout out to where you are tuning in from. So we've got Johnny Rotten over here, Matic first, profits into XRP. A lot of stuff going on with Matic. We've got Johnny coming in from Thailand. What is up? So we've got we've got AZ Desert Hippies tuning in. So if you're tuning in from Arizona, Jennifer in from Bali, and XRP Experience was first in the chat today from London. So that's awesome. So for those over in England, tea today, no espresso. All right. Oh, check it out. And we have none other than DNI. DNI, what is going on? And a big shout out to our big supporter, Hans Loaded. Hi, OTC family. Looking forward to another super show on the chain. And don't forget to like and subscribe. So, oh man, we got Omer coming in here from Turkey. That's awesome. That's great. So we got Turkey, we've got England, we've got Bali, we've got Thailand, we've got people from all over the place. How great is that? Outstanding. So, all right, let's dig in here. Let's dig in. First things first. So we know we've all been following the Ripple. Oh, you know what? Before I get into Ripple, there was something that came up, and it kind of underscores the need right now, right in this space. And I don't have the letter here on my desk, but it underscores the need for more control over your own personal finances. Let's call it being able to bank yourself. So a letter went out from JP Morgan, and they have chosen to increase the cost of checking accounts. Now, for the longest time, if you open up a bank account, it could be typically around $5 a month that's processed in order to take care of your typical, checking within, X amount of transactions. There was always a way to overcome the $5 fees. Is if you had X number of transactions, or you put X amount of money in, or you hold X amount of money in your account. So the letters go out, and JP Morgan Chase has now increased the cost of their checking accounts from $5 to $12 a month. $12 a month. So if you can imagine, it went from, $60 to well over $120. And I'm looking at this, I'm like, how in the world are they rationalizing this kind of cost? How do they rationalize $144 a year for a checking account? Now, you look at the banks and you say, are the banks crushing it? Are they, posting record profits? And I thought JP Morgan was bragging about posting record profits. And so I'm looking at this. At the same time, we have this discussion about the rise of cryptocurrencies. And we're going to look at this one bank called Vast that allows you to directly trade ADA. And so I look at this move by JP Morgan, and, also understanding that there's certain banks out there that don't function and allow you to operate smoothly working on a digital asset platform like Uphold or another. And the banks, continuously reject any of the transactions. So there's banks out there that are still not being friendly to the crypto space. And it's crazy, because here we are as cryptocurrency is really taking hold. But there's still banks that are trying to push back and resist. And the big one right now, regardless of cryptocurrency, but if I'm looking at what JP Morgan is doing, they're pushing the cost of a checking account beyond what many people can afford. So imagine if you have, and it's a reality. So, and it's interesting, not to belabor this point of the unbanked or the underbanked, and the significance of the digital asset to many people that are in that classification, that fall in that category, or that are in developing nations. So you have underbanked and unbanked in developed nations. In the US, there's a percentage of people in the US that are unbanked, not that they don't work, not that they don't earn money, but they're unbanked. They are, and so you see this conflict, and you're wondering, exactly what exactly is going on, so, so as you look at this, and I'm looking, JP Morgan raising the cost of checking accounts. So if they're raising the cost of checking accounts, what kind of impact does that have on pushing more people away from the banks? And from that perspective, it's amazing to me. It really is. And so that's kind of like, that starts out the day. That was the first thing that I was looking at this morning. And I said, this just underscores the significance and the importance of digital assets. It underscores the significance of the direction that cryptocurrency is moving in, and the impact that it's having and will have on people's lives. So Michael too says HSBC Bank is letting everyone open a bank account in the UK now. Hey, that's great. And in the US, JP Morgan is increasing, almost tripling the cost of their checking account per month. Now, not everyone is going to pay that $12 a month. If you have ACH automatic deposits, they'll waive it over a certain amount per month. If you have deposits, if you keep an X amount of dollars in per month, I think it's minimal, maybe 1,500 or 2,500, but it's crazy. It's crazy, Sophie's saying if the unbanked can be banked, they can also be taxed. And that's also a really good point. So there's a large percentage of people around the world that exist, day to day, strictly on fiat currency, strictly. And so they do in some way avoid, potentially, if they're getting paid in cash and they exist on cash, then they're going to go unbanked. So it really is amazing. Because then if you bring those people to the banking world, then you're also increasing your tax base. But if those same people are spending fiat, they're also in the tax world because they are still paying sales tax, which is a whole different argument you can get into for the flat tax or the fair tax or one of the many others. So Johnny Nevermind is saying, I was being charged $25 a month from my checking account. Bank of America is terrible. $25. Can you imagine that? It's amazing. It's amazing. Now, the total of the Impaler is saying, have you changed your mind on the level of destruction BTC mining is causing? That's a good question. We're going to talk about what they're doing in El Salvador. So DNI is checking out and hanging out with the elephants today. So he says hung out with his elephant neighbors today. So lots of fun. Very cool. Matthew, Sarah, terrible. Chase charges, charge shift $12 a month. You have to have 1,500 at all times. There you go. So Matthew knows and probably saw the same letter. Yep. And so there's many that might not be able to do that. They might not be able to keep that 1,500. Maybe they won't do an ACH direct deposit. There's all these different reasons that are going to push them away. And then the question is, how many others are going to follow suit? So, Michael, all Manchester City Council Sunday markets are going cashless for stall holders and car parking. Is that 100% cashless, or are they now making it easier? Now, it's interesting. I know you go to different parts of the world, and one part of the world that was very easily cashless, which amazed me, was Iceland. And so obviously things have changed over the past couple years. There's been a major push towards cashless, but I know being over in the UK, Germany, there was some resistance to different forms of payment. Some, like in Germany, even over the past number of years, going into a restaurant, and then you find out that traveling with Amex, American Express around the world, many times you run into resistance, then they don't accept Amex. And then you have those that, you carry a cash card, but you can only use the Euro debit card. But now cashless society taking on and expanding all over the place, which is amazing. Darren, basically they're forcing you to have two savings accounts. And that's unfortunately. So Johnny's saying Australia is coming to America. It's sad but true. I've read the book and I've already seen the movie. Australia. Unfortunately, that's the case. All right, let's go back to Ripple. I don't know. I kind of went down this 20-minute saga on banks, but Ripple is claiming another victory in the SEC courtroom saga. So how great is this, right? It's just like every time there's a news cycle and there's some sort of a discussion here between the parties, the judge and the parties being Ripple and SEC, the SEC always comes out on the losing end. I've yet to see a point where the SEC is coming out on the winning end. Now, one of the things that Gary Gensler said when he came in is that he's there to protect the retail investors, right? So he's coming out to protect retail investors, but we're going to look at the SEC rampage over the past month or so that doesn't even come close to looking like they're protecting the retail investor. And we'll get into that. But Ripple here claiming victory after victory after victory over the SEC. And I pulled this article up again. I might have not plugged in the second monitor over here, and that's why it's not working. But so Ripple claiming another SEC victory. And this is so important. This is so critical. Let me see. You know what? I'm just going to do it this way. Here we go. I can share it. I can share the tab directly. And then when I do that, it makes it easy. So check this out. So here's the SEC claiming another victory, or the Ripple claiming another victory in the courtroom over the SEC. Now, right here, it says another win for Ripple in the ongoing courtroom saga. Judge Nepern has sided with arguments put forward by the XRP legal team and will rule decisively on deliberative process procedures on September 28th. So this all came out of the discussion on Tuesday. Nepern's decision came at the end of last night's telephone conference, which aimed to make headway and push past a squabble over Ripple's request for fair use access to internal documents from the SEC. So here we go. You know, it's like, it's crazy because every time there's some sort of a move and a victory, let's call it, the dates get pushed back. It's like there's one discussion in a month, and then a month later, they give them like 3 weeks to plan, and then they get in front of the judge again. And then, you know, and it keeps pushing it out, pushing it further and further out. So now we're going to see how's the judge going to rule now on this on the process. But yet it's September 28th. So at the end of the month. So here we go. And we'll see what happens. Now, we also discussed already that Judge Nepern is going to be conducting an on-camera examination of internal documents herself without the Ripple legal team, right? And here, look at this. In order to ascertain whether the SEC has overstepped the mark with regard to deliberative process procedures in an effort to minimize fact discovery. Now, it seems like the SEC, instead of trying to argue the case in defense of retail investors or bring proper procedure, it just seems like they're always trying to find and finagle a way through this legal process to not disclose certain things that have occurred within the SEC, to withhold certain documentation, to withhold certain action. And it just seems like time after time. And as we've gone through this process, it seems that the judge is getting more and more perturbed with what the SEC is doing. And I know Chip and I talked about this, but it's amazing because, as you kind of dig down, you can, read through this entire article here, but this is on Yahoo Finance. This is starting to take, center stage in mainstream media, right? So this was on Wednesday. They posted this. We've already dissected it, for a couple days. We dissected it Wednesday and Thursday, but as you look at this, on mainstream, and it's important. It's important because then as we dig in and as we go through, and we're gonna go through and look at the rampage by the SEC that shows that they're exactly the opposite of working towards supporting the retail investor. It seems like they have some ulterior motive to not support the retail investor, to do the exact opposite of supporting the retail investor. So we'll go to that in a minute. Let's see. And Omar saying the same thing. It's what he finds boring. 2 to 3 weeks delays every single time. That's how it works, right? So James Rule, what is up? He's driving to drone film a Pee Wee football game. That seems pretty exciting. What is up, James Rule, XRP? The man, the myth, the legend. So, all right. Let's see what we got here. What have we got? What else have we got here? So, all right, cool. So we go from this, and I'm looking, I say, okay, we could spend forever just singling and discussing, the movements of XRP, but there's so much going on. There's so much in the space that's just like continuous, that becomes really, really significant. Let's see here. If I have to do this every single time, this is going to be, crazy, but we'll do it. All right. We'll just click one at a time, because otherwise I got to get up, go behind the desk, figure out how to plug everything in. So check this out. All right. We've got Bitcoin, right? Bitcoin. Everybody knows about Bitcoin. Everybody wants to talk about Bitcoin. And it's becoming more and more relevant. It's also becoming synonymous with cryptocurrency. So it's kind of like Kleenex or tissue, or, there's a whole bunch of different examples of that, but it is becoming synonymous with cryptocurrency, because as the bull run moves with Bitcoin, the bull run moves with the other digital assets. As companies, corporations, countries even focus on Bitcoin, they're also focused on other assets. And if you look in the top category, you can talk about Ethereum, you can talk about XRP, you can talk about Cardano, you can talk about Polkadot, you can talk about a whole bunch. And we can't fool ourselves into believing that just because there's an emphasis on Bitcoin, that these groups are not also then focusing in on the other digital assets. It's a given that they would focus in on the other digital assets. But here, what's important to look at, though, is the full movement of the space, because there is an ebb and flow in the movement with these bull and bear cycles, which we had read, a number of days back. We covered one article, and this guy's opinion was that we're moving in a direction where these massive bull bear cycles are going to diminish to the point that they're no longer existing. Trip and I were talking about it, and it's going to be more like a drunken stagger up, like most stocks do a drunken stagger. So if you look over the period of time, you zoom out, you constantly see an up motion, and then you see little staggers along the way. If you look at Bitcoin and crypto, XRP and others, you can see the uptick from the beginning, but there's these big, moves. Obviously, we're all familiar with those. So if you can diminish that bull bear market cycle and go into that drunken stagger, which still represents, sometimes the bull and bear markets, they're just not as extreme. So here, the focus, and we've seen this, multiple times over now, where there's this discussion over Bitcoin moving into a direction of 100,000, 150,000, this one 180,000, 200,000, 250,000, a million. And there's all these big analysts, big name analysts that are looking at that. There's some big names in the space, whether it's a Michael Saylor or others, that have looked at the digital asset space, Jack Dorsey with Twitter, and we're going to see what Twitter's doing to embrace cryptocurrency now. So as you get big tech moving in this direction now of embracing cryptocurrency, PayPal embracing it, the brick and mortars begin to look more and more irrelevant when they fight back. So now there's actually a monumental effort. And this is, I mean, it amazes me, right? But so there's this monumental effort right now that we've dug into. We looked at the infrastructure bill. We looked at everything. An article came out yesterday that was talking about Biden's desire, President Biden here in the US, his desire to raise taxes across the board. And the emphasis of this article is that big tech is pushing back. Amazon, Google, Facebook, many within Apple, Microsoft, many within big tech have been resistant and pushing back to his narrative of an increase in tax, even though some of the ownership, the CEOs, have embraced and pushed for wealthier individuals to pay more taxes. But there's this battle, whether it's coming, against big tech or it's coming from brick and mortars against the cryptocurrency space, with this resistance and this pushback. But what we're seeing is that the more there's resistance on the one side, the more you realize that what they're trying to do is hold on to their control, hold on to their power that they slowly see, slipping from their grasp. And I've referenced this so many more, times, and Chip and I have referenced this. When we had Alex Mashinsky on, one of the things that Alex Mashinsky said, and you think about what he did for the voiceover IP space, you think about what he had done to bring Wi-Fi down into the subway systems of New York. You think about how he is now creating, kind of the voiceover IP of money, and some of the, his concepts of what he's doing with Celsius, but and all around, these big power players in the digital asset space. You have the CEO of FTX, some of the big statements that he had mentioned about buying Goldman Sachs, that it's not off the table at some point in the future. But this messaging that this is the direction, this is where we're moving in. So Alex Mashinsky had said, out of the ash heap of this disaster, you'll see the rise of brand new titans in the finance space. And these brand new titans will not be represented by the old ones from the brick and mortars. Not to say that these brick and mortars will be crushed. And we talk about this over and over and over again because it's extremely relevant when you see the brick and mortars trying to hold on with dear life to everything, right? They're just, they don't want to let it go. The resistance. JP Morgan increasing their checking account fees to $12 a month is another way to maintain that control, to charge more, to take more money out of people's pockets. The idea of a digital representation of currency, a CBDC, another mechanism of control, of holding on to the people. Now, every country might, roll out their CBDCs a little different. I think it's at this point, we've reached a point of no return of the inevitableness of the centralized currencies, the CBDCs, the central bank digital currencies. It's inevitable at this point that we move in that direction. Why? Because the world has deemed it so. And so if the world has deemed it so that we're moving in that direction, there's a new battle, because the new battle is now being waged at the digital level. Now, the brick and mortars and the central banks and the governments that don't want to lose sovereignty over their currency have realized that the cryptocurrency space has been expanding exponentially. And in order to hold on to this direction that everything's moving in, they've had to roll out their own CBDC. And we remember about 2 years ago when they hauled Facebook, Mark Zuckerberg and some of his people from now Diem in front of Congress to discuss this direction that Facebook was trying to take regarding digital asset. And they silenced him, right? And it was amazing. But in the background, they still kept building. Meanwhile, the crypto space kept getting bigger and bigger and bigger. And it's it's impressive, as we dig in. So I wanted to give a quick shout out to James Rule XRP, XRP coffee. It's faster than Bitcoin. That's right. That's exactly true. So Chip said, remember when Biden said no new taxes for those who make under 200,000? But Chip, it was 400,000. No new taxes for those who make under 400,000, right? And it just seems like, if you want to look at taxation, you also have to look at inflation, because if your policies are bad, causing an inflationary run on your currency, that's a tax. Why? Because it's a penalty. It's not a direct tax that anyone's collecting, but it diminishes your value of what you're holding. So in many different ways. All right, so back to the Bitcoin run. So the Bitcoin bull run sparks 180,000 Bitcoin price prediction ahead of institutional fireworks. Now, again, this is relevant, and we'll see why it's relevant as we look at some of the other narratives of today. But Bitcoin traders played a guessing game on Thursday at 50,000. They're looking for support. Crypto scene spectacular September. So now you have data from Cointelegraph Market Pro Trading View, and they're tracking the BTC to USD. Now you see the inflation of the US dollar as Bitcoin grows in value against it, right? So the largest cryptocurrency saw 4.5% gains on the day. These nonetheless beaten by 3 of the top 10 altcoins. So that's, again, my point. So they might focus in on Bitcoin. They might keep talking about Bitcoin. They want to reference Bitcoin because it's the biggest name in the space and it's going to keep on growing. But they have to underscore and highlight, nonetheless, beaten, right? So Bitcoin saw 4, but the top 10 altcoins over 7%. So even though Bitcoin is increasing, at some point, Bitcoin gets to a level, again, if those bear and bull markets shrink, the big percentage booms also shrink. So it gets to a level, whatever that level is. Is it going to go to 100,000, 150, 200, 250? Does it get to that level? But what's important to understand and recognize, I guess, is that regardless, the rest of the market's following the trend. And people's perception, they're always going to focus on, even if you can buy a fraction of a Bitcoin, people are going to focus on it's $50,000. And you think back, and people think traditionally as far as one for one. I'm going to buy, I have my fiat currency and I need to buy a stock, and that stock is $100. So each share of stock is going to cost me $100. They're still thinking in those terms when you're looking at Bitcoin, or if you're in foreign currency exchange. If I have $1 and I'm going to invest in euro, then my exchange rate is whatever it is. There's a 25% cost on top of my dollar. I don't know what the current exchange is. Maybe it's $1.25, $1.30, $1.10, $1.15. I have to look up whatever the exchange is on the euro, but there's a cost, right? And it's a direct. You're not going to necessarily invest in a fraction. Everyone wants to think in round numbers. So same thing with Bitcoin or some of these other assets. People want to instinctively invest in a whole. They don't want to invest in a fraction. And if you look at 50,000, you're like, I can't, even if I have 10,000, I'm going to own a fifth of a Bitcoin. Or I can take 10,000 and I can own, 10,000 XRP. Or I can own, I could invest in and hold 3 Ethereum. Or I could buy and invest in, X number of 88 Cardano. And so people, their minds are moving in that direction. Big money, little money, it's all the same. It's still the psychology of it. I believe that. I believe that it's there. And as people look at the bigger moves, they start looking down the list. Well, what other activities going on? And again, we can't ignore the fact that even, the big players are looking at these other assets. And that's why there's so much conversation. That's why Vast Bank is moving in this direction. So, hang on. Sophie, you have to get up pretty early to get ahead of Jeff. That's right. Early. Finally, Oscar. Finally, you get on live. But it's great because Oscar's coming in from Iceland, so it's perfect. It's perfect. Skydive is saying that Russia has been selling jet fuel in yuan. So think about that ramification. So last night, we're out pretty late, but a conversation came up on what's going on with the China's move, right? Economically speaking, with the digital yuan, with the yuan in general, with the Silk Road initiative that China had implemented with the digital yuan. And think about, when we get to the CBDCs, how manipulative a CBDC can become, right? What are some of the things that you have to be cautious of and underscore with a CBDC that would be different than a digital asset? With a digital asset maintaining a decentralized nature, you're not going to have your data captured. You're not going to have data tracking. However, you could potentially, you think about the blockchain. Every transaction is revealed on the blockchain. Now, if you're able to connect the dots, and there's some activities over in Russia right now, they're investing in software to track the movement of digital assets by incorporating everything that's in public on the blockchain. So you have that. They can visibly see it. They can't manipulate it. Centrally banked digital currencies are either controlled and manipulated by the central bank, which I don't believe the sovereign governments would want to have a central. Why? So even if you have, like, here we have the Federal Reserve in the U.S., the U.S. government still is overseeing and controlling the printing of the money, even though it's out of control. Printing out of control. But if you move that strictly to the power of the central banks with a central bank digital currency, the central bank now has all the control over the minting of money. And the CBDC is nothing more than a digital representation of fiat. And so we have to really consider some of the movements and trends that are going on. I think it's important to understand because, as I was saying earlier, it's inevitable. It's going to happen. And one of the things that Ripple has discussed and Ripple is doing, the one thing that we know for certain is that as these CBDCs come about, they're still going to be working in silos. And we've talked about this multiple times. So if you have the silo of the CBDC, you still need to move the digital yuan to the digital dollar. You still need the rails. You still need the instant settlement. You still need the liquidity. Just because you have digital representation doesn't mean you don't need the liquidity, and you don't need the rails. And some of the things that Ripple is doing to orchestrate, and some of the things that Ripple is doing with their with that discussion of allowing well, at least David Schwartz discussing the possibilities of side chains utilizing the XRP ledger. It increases the conversation immensely. I mean, it's just it's unbelievable, what could be done. So anyhow, so let's dig in a little bit further here. So we're looking at the direction of Bitcoin, and then we also look at the crypto creep, throughout Latin America, meaning it's growing, right? You're seeing a drive in the direction of cryptocurrency in Latin America. Obviously, one of the big ones was El Salvador. However, El Salvador has volcano power. However, Venezuela has cheap power as well. Look at this. Cheap power brings Bitcoin mining boom to Venezuela as country moves towards a digital economy. Now, CBDCs, fully centralized control over money, right? Look at that. Look at Matic at $1.64. Look at that. Nice. So Venezuela, that we know they tried to roll out their digital Bolivre, their Bolivre, they're in September or October, they're going to cut off 6 zeros to fake the fact that they didn't have 1,000,000+% of inflation on their currency. I mean, their currency has no value at this point, but there's still business going on. There's still people working in Venezuela. There's still people trading in Venezuela. On Friday, I met with one of our clients from Venezuela in Miami, and it's amazing to me, because they're still working, they're still traveling, even with their currency having almost no value. If you were lucky enough to have had accounts and registered businesses in the US and accounts in dollars in the US, then you were able to kind of get by the crash of the economy in Venezuela. But now when you look at cheap power, right, that El Salvador has volcano power, but Venezuela has cheap power. So now as you have Bitcoin mining flocking to Venezuela, what is that going to mean for their economy? How does that change the overall infrastructure of the country? Very low power rates in Venezuela have created a powerful incentive to mine Bitcoin for a lucky few that have the capital. So that's relevant. We just talked about who has the capital and dare to purchase miners and infrastructure in the country. This is so important. Cheap power creates mining opportunities in Venezuela. The rise of digital currencies has created a new industry that uses cheap energy and turns it into precious Bitcoin. Look at how critical this is, how important that digital assets will mean for this country. Now, we've had some in the US that have said cryptocurrency has done nothing for others in other countries. And we know it's nonsense. We know it's all BS. We know that XRP has had an impact on people's lives, regardless of what Ripple is doing or isn't doing. Irrelevant. But XRP on its own, we know that there's many projects that are building, utilizing the XRP ledger, that are moving in that direction. And yet here we have this conversation now. Venezuela's economy was basically done. All right, their currency is useless. And now people are going to circumvent, regardless of how penalizing a government can be. At the end of the day, people are very innovative, and they're always going to find a way to go to the free market. And so even in a communist country, even in a socialist country, as difficult and risky as it can be, the free market will always win over socialism and communism. Why? Because the free market boils down to freedom and liberty for individuals. Regardless of what anybody wants to say, the free market gives people opportunities. As soon as you have entities that come in and start deciding too big to fail, who gets to win, who gets to lose, you've now taken away the free market. But even at the smallest levels, person to person, we're seeing the free market is real. The free market is game changing. Cheap power in Venezuela, people see an opportunity. They have the capital. They're going to flock to where the power is cheap. They're going to go there, or they're going to go to El Salvador. On another side of it, and I don't have the article up, Axie Infinity and other games has become a major opportunity for people in Venezuela to earn money, playing a game, earning digital asset, playing a game. Think about that. Think about the free market opportunity that an individual with a computer can earn money just from playing. a play to earn game. I haven't looked at it. I'm going to look at this and we're going to talk about it over the next week or so. But look, it's created opportunities for less fortunate. You don't have the money to buy a Bitcoin miner, but you have a computer and you can play Axie Infinity, and the small amounts of money that they're earning are monumentally greater than what they can earn in their own country in Bolivre. So you think about the impact that has on someone. Imagine someone's making $50 a month, and that $50 a month over in Venezuela in a crumbled economy can be life-changing. Life-changing. The country is going digital because of the possibilities. So people will find a way. They'll find a way, and they're utilizing, the cheap cost of electricity. Obviously, you're going to have big corporations also flocking to Venezuela, bringing their miners, if possible, right? But look at this. So he brings 80 A6 miners working nonstop. And this is basically almost free. Why? Because they're paying $10 a month in power cost. The free market. Look at this. Each of the mining machine costs approximately $400. That's it. Can you imagine? He's making $400. But look at this. A country, the minimum wage doesn't reach the $10 threshold. Minimum wage, how often? That's probably $10 a month. I don't know. In any case, the price of mining goes even higher, right? We know what happened in 2019. So we got issues. Blackouts, rolling blackouts. So there's obviously hidden cost of mining. They want to get into it. The digital economy is blooming all over the world. In Venezuela, this is why Bitcoin has significance. We can't undermine it just because you have a bunch of Bitcoin maxis rolling around the world thinking that they're number one. We know that Bitcoin is not going to be used as a transactional asset, at least not now. It's too expensive. It's too slow. It's a good store of value. Someone referenced if I'm going to talk about and admit to the environmental cost. You know what? They have power over there. They're using the power in Venezuela. So, and these people in Venezuela are making their money. So, so that's what's important, right? And look at this. Axie has been around since 2018. Look at it. Has allowed Venezuelans to invest and offer scholarships for others to earn while playing. I mean, it's amazing to me. It's amazing to me that this is what's going on. I think look at this. This is now so popular in Venezuela. Look at that. This economy has bloomed in the free market around the failed Bolivre. It's so popular in Venezuela that 300 stores are accepting SLP, which I'm assuming is the native currency of the Axie game. One of the native, it's right there. One of the native tokens of the game. 300 stores. That to me is super impressive. I mean, that's super exciting, right? That is the direction that things are moving, and it's amazing to me. I mean, if you don't get excited about that, then it's amazing. It's unbelievable to me. So, you have this direction that we're moving in. Let me reference a couple other things. El Salvador is actually going to be building out a blockchain infrastructure utilizing Algorand, which is really, really cool. But before we get there, so Twitter, let's just move over to Twitter for a second. And then I want to get into El Salvador real quick. And then we're going to go down where there's a few other things that we're going to address. But Twitter to allow users to add BTC and ETH addresses to profiles per leaked screenshots, right? So we don't know if it's unofficial per this article, unofficial, but Twitter's product lead hinted that there could be an announcement soon. What does that mean? You're going to be able to put in your profile your Bitcoin and your ETH address. So the latest update. So now they have this tip jar feature they're rolling out, and it's going to get more and more out there. But then you're also going to enable Bitcoin tipping for content creators if you want to do that. I don't know. I don't know if people are going to be tipping in Bitcoin. I don't know with the cost and everything else. Are people really I don't know. And they're also going to allow them, you can add both. And as that grows, I'm sure that they'll start adding others. All right. Because it becomes relevant. You can do all sorts of different mechanisms of how you want to send a tip to somebody on Twitter. If that's the case, they're enjoying the rewards of the digital asset space growing. What I see here is Bitcoin address, a Cash App, an Ethereum address, the Patreon account, PayPal. I don't see JP Morgan rolling around in here. You don't see that discussion. So hopefully I shared that. So there you go. ABI says put Bitcoin on the XRP ledger. Exactly. If they would roll it through the XRP ledger, and there was spend the bits, I believe, is also they're working on a way to get Bitcoin on utilizing the XRP ledger and utilizing some of those amazing features, right? So, all right. So now let's look real quick at El Salvador. We're gonna have to fly through this. Unfortunately, since I didn't turn on the monitor, let's look at this. Check this out. Now this goes back to what's going on in Latin America, El Salvador. El Salvador to develop blockchain infrastructure using Algorand. How amazing is that? So they're looking at a way to look as the president cuts a path towards national Bitcoin and crypto adoption. Notice how it says cryptocurrency and not just Bitcoin. So there's big plays going on because here a key partnership has been forged with the leading Latin crypto firm Cobax to implement blockchain technologies. So the rollout will take place across the Republic services industry, and they're going to build it using Algorand as a layer 1 solution and a continuation of its work to deliver FutureFi. So they didn't go to Cardano. They ended up going to Algorand. There are projects out there that are going to gain big time recognition as this space continues to develop. And you're starting to see that development in many of these developing countries. And, many of the countries that have had difficulty in the economic space, even on a global scale. So it puts them in a position where they become leaders in this space. They're taking that first leap forward where others won't. Look, El Salvador Congress backs $150 million fund for Bitcoin ahead of adoption as legal tender. How great is this? Look, 127 million euro, $150 million to facilitate conversions from Bitcoin to US dollars ahead of the Central American country's planned adoption of crypto as legal tender next week. So it's coming quick. It's coming quick. And they're doubling down on it. 64 in favor, 14 against. Congress approved the fund in El Salvador. They're adopting Bitcoin September 7th. It's amazing. The very first in the world, right? The first in the world to use it as legal tender. That just shows the direction that this is going in, that adoption. You have all the naysayers out there that we're trying to resist, but that's not the case. U.S. consumers can now buy and sell Cardano directly from a bank account using Vast Bank. So Vast Bank is the first nationally chartered U.S. bank that allows you to buy, sell, and hold crypto assets directly with your bank account. Vast Bank is an independent bank owned by one family. So maybe there's some risk involved in that bank. I don't know. It's in Tulsa, Oklahoma. And on this was last week, they said they have new crypto banking services available via a user-friendly mobile app, which simplifies the buying and selling of crypto directly with bank accounts. Bitcoin, Cardano, Filecoin, Orchid, Bitcoin Cash, Ethereum, Litecoin, and Algorand. Now, I'm not saying they picked the right currencies, but the direction that they're moving in is the right way. Again, it's owned by a family. One family owns it. I don't know anything deep about it. We're going to have to research it further. But just for the matter of simplified discussion, there's movement in this space. There's stuff going on. Now, over in the UK, they're researching hardware wallets for tokenized central bank digital currencies. All sorts of ideas of hardware wallets. How are you going to spend your digital currency? I say WTF, because why not use a credit card? You know, if you have a credit card, MasterCard, Visa, why not connect that to your CBDC? Why do you want to put yourself in a position where you have a debit card? Why not have a credit card? Why not keep your money in your bank and pay the balance of your credit card off every single month? Why do you need some new technology? Why can't you just use the credit card? It just makes no sense. They're walking down a path of irrational. If it's a CBDC and it's a digital representation of fiat, then why would you have to change anything? It doesn't make any sense. This is how insane, the lunacy of it. Now, what they could do to help if they really cared about their consumers would be to figure out how to utilize RippleNet, utilize ODL, utilize XRP to decrease the cost of moving money, decrease the cost of availability of money. So if your credit card cost to the retail outlet is 2.95% or more, or a little less, why not figure out a way to decrease that down to 0.5% or 1% and win-win for the entire infrastructure, everything? Why not do that? Why not focus? If you have a CBDC, you're cutting out all the middlemen, all the fat, so decrease the cost of transaction. That makes the most sense, instead of having this conversation of how you're going to build out a hardware wallet that doesn't make any sense. So that's over in the UK. I don't know. It's so amazing, right? Cambodia is working to roll out their digital economy at a massive scale. But you get countries like what we're seeing in Venezuela and El Salvador taking a lead in the digital asset space with the decentralized cryptocurrencies, trying to leverage the direction crypto's going, not CBDCs, not trying to find another way. They're almost too smart to realize that fiat is problematic. Central bank digital currencies are problematic, and they have all sorts of problematics written all over them, right? From central bank control, how do you figure it out, to over printing of the central bank digital currency and putting yourself in the exact same position, but you're adding one more layer, like with the digital yuan, where you could potentially social score people's money and control them and control the region and stranglehold the region when they're using your asset and say, you're not trading anymore. Sorry, we're not letting you we're not giving you access to the currency or the rails. We're just cutting you off. Right now, people are complaining about SWIFT and the US dollar when they're utilizing certain action that's agreed upon on a global scale, that there's certain sanctions against certain countries, like Iran, for instance. It was an agreed upon thing, and then SWIFT doesn't allow the utility of the rails between banks. But then you want to not focus on the fact that with a digital yuan as an example, with the regional influence, the country now, it's not even SWIFT. It's not a conglomerate of banks. There's no voting. There's no discussion. There's no global bodied agreements. There's nothing. It's one country deciding they can control the entire ebb and flow of the finances. And people look at the US dollar reserve. What has the US dollar done to better the entire world? We wouldn't have the economies that we have on a global basis right now without the US dollar. It just wouldn't be where it's at right now. It simplified transaction. It's a whole different conversation, and we can get into that another time. But the central bank digital currency versus the digital assets that we see going on in El Salvador, it's a different conversation also. So I think it's important to identify that. We also have to look at, I wish I would have gotten, so tomorrow night we'll go into more with Chip, the SEC on the Rampage, because Uniswap is under investigation. The SEC, there's some updates on the docket for Library. There's the SEC v BitConnect, which we talked about. There's SEC v payment for order flow that we referenced. There's SEC v DeFi projects that Gary Gensler came out and said DeFi is not immune to regulation, and there's more action on DeFi, and we're seeing that with Uniswap. And then Gary Gensler came out and said that crypto needs regulation to survive, and we need to dig into that. What did that mean exactly? Because we know we need clarity. What is his idea of regulation? Because if his ideas of regulation is comparable to the lawsuit that's going on right now, SEC v Ripple, I don't know if we want his regulation. I don't know if we want any part of his ideas, right? Because his ideas, it would also then back up a lawsuit by attorneys that seem to be completely lost and they're grasping at straws and trying to be very conniving in the way that they're managing this case against Ripple, while throughout this entire episode, they all come out and say, well, we're there for the retail investor. Gary Gensler, we're there for the retail investor. We're there to protect the retail investor. That's the mantra, right? It doesn't matter how many times they say it. It doesn't matter how many times they put that in print. It doesn't make it true. It's crazy. So we got to get into that more tomorrow. I also have this really great thing we're going to discuss, which is countries with a rocky relationship with crypto. And then also, and I find this interesting, so we'll talk about this tomorrow with Chip, majority of Europeans, get this, a majority of Europeans, they bold, want a sovereign digital currency, not a digital euro, which is a significant departure away from the EU and the euro, but they want a sovereign digital currency. Maybe that could be built on the layers of a digital asset, would be much better. So much better. So much better. I'm over time here. You guys are amazing. You know what we always say? We by far have the smartest subscribers, the smartest comments, the smartest viewers in the entire crypto space. That's the best part about coming here every day, that we have the show and watching the comments, engage in conversation, because you guys are outstanding. Outstanding. So also, if you're brand new to On the Chain, make sure you hit the subscribe button. Make sure you hit the bell notifier. Why? Because it actually helps. It helps the algorithm. Hit the thumbs up. You hit that bell notifier, you get notified every single time we go live with a live stream. And we appreciate having you guys on with us, because you guys are absolutely outstanding. So with that, that's all I've got, Chip. That's all I've got, OTC family. One last word. We do stream 6 days a week, Sunday through Thursday at 8 p.m. Eastern Standard Time, and every Saturday morning at 8 a.m. Eastern Standard Time. It's always a pleasure to see you guys right here on the chain. And I guess we'll tune in and see you guys on the next one, which happens to be tomorrow night, 8 p.m. Eastern Standard Time, Sunday. See you then. I'm out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.